Ayers Alliance joins us on the phone line from Sydney. Morning, Jonathan. There are only a few of us working today all around the world, but we are battling further bad news for crude. Do you think we once again see those 32 levels?
Good morning. Look, I think it's if you look at the amount of news as it actually thrown at it, and you also look, I guess, at the volatility and the lack of volume traded through the market, I think the crude actually held up okay. You know, obviously we look at the inventory data, we look at the stockpiles at Cushing, you know, all presenting a very, very negative picture in terms of supply and the expectations of a glut. But we did manage to have a little bit of rally from those lows. So I think in that sense that it's actually a little bit more positive than negative.
Okay. Jonathan, hi, good morning and greetings of the season to you. What is the expectation on crude for the first part of 2016? On Brent, that's at $36 a barrel now. Where do you think it can go?
Look, I think at the end of the day, if the Fed has been correct in what it turns around and says that the US economy is picking up, then I think the supplies that we've had, and remember the market anticipated that we get an inventory draw just on Wednesday. So I actually look, when I look into 2016 quarter one, quarter two, as long as this $36 holds, then I can see prices going back to that US 40. But obviously it's a very key technical level around that 36, and a break of that says it tested a new lows. So if anything, quarter one, quarter two, I'm a little bit more bullish at these levels.
You're a little more
Bullish.
Okay.
Yeah.
So what do you see it averaging 40?
Yes, I do. Look, I think one thing that we've seen before, and we have to cast our minds back to 2004, when we had these sorts of levels of stockpiles, you know, with Cushing. And I think the ability for the economy to actually start to use more oil, more diesel, you know, as the economy starts to pick up. So I'll be guided by forecasts from the Fed on the speed of interest rates moving higher, and how we reconcile that to demand. And I think if demand starts to pick up, then you'll probably see that crude will start to pick up. Remember, looking at some of our other primary input markets, such as iron ore, leading into 2016, the price action has been very, very positive. In fact, you know, we've had 7 days of consecutive climbs on a primary input that the economies actually need. So if we look at the same and line it up with crude, then I would be expecting the same. So if anything here, economic demand to pick up, therefore consumption will pick up.
Okay, let's hope for that in 2016. Jonathan Baratt, thank you very much for joining us.